Welcome. This is Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothfeld with you for your, I don't even know what date it is anymore. It's Thursday, getting near the end of the week, tail end. Interesting day out there today, getting more intraday highs. We'll talk about that here in just a second. I encouraged you guys yesterday to go and check out a webinar that Eyal Shahar was going to be doing, which was, let me just make sure I have it all up here and running for us. Eyal Shahar is giving another webinar tonight. We did one yesterday at 10 a.m., one at 5 p.m., and then one tonight at 6 p.m. So if you have anybody who hasn't seen that webinar yet, I would encourage you to go check it out. He'll be doing a live presentation with Gene Longobardi, who's the Chief Operating Officer, and of course Eyal is the Chief Executive Officer, talking about some major announcements within the walls of online trading academies. If you're a graduate, make sure you guys check that out. How do you check it out, by the way? TJ is going to show you right here. You go to myota.tradingacademy.com. Of course, if you're a student, you know that's your portal to get to all of your content and all the classes that you have. So as you can see on the screen here, I've logged into my account. I have a lot of classes, by the way. If you scroll down here on the right-hand side, it says Upcoming. If you scroll down, there's one near the bottom that says You're invited to an important webinar. You click on that one. It tells you a little bit about it. And right here, you would click on this one that's happening at 6 p.m. tonight. In just about 3 hours from now, it will be a really interesting webinar for those of you who have not heard yet. There are some major announcements coming, and of course, it'll be much more talked about over the next few weeks. But right now, we want to make sure all of our community, our students, all understand what is happening and what that announcement is. So check that one out. That'll be tonight at 6 p.m. Be there or be square. All right, let's go to our markets. Let's start with our top 7. Bottom. Oh, we got MJ on the chart. Yes, we had a lot of questions about MJ. We will get to that later. Don't jump the gun, TJ. Let's go to our bond futures. It wasn't all positive out there today. Yesterday we had everything in the plus category. Well, today we had a couple things negative. As you can see here on the way that this 10-year Treasury futures, it's a tongue twister, 10-year Treasury note futures, I always want to say it properly, you have a really big hammer formation, which basically tells you it sold off significantly, then rallied back up and closed near its highs. What that means is it was ever so positive for the futures contract, which means that the yield dropped, and it dropped just ever so slightly, almost imperceptible. It was a 0.3% drop in the 10-year Treasury yield to 1.644, making it your worst performer. Nipping on the heels of that, we had the Russell 2000, the only index today that did not really sell off, or did not really gain, excuse me. Russell 2000 coming right into the peak of that supply going back to the 24th of January, ripped up to it in 3 days. That's that 3 white soldiers that there's a candlestick pattern I told you about in Steve Nissen's book, and anybody who's a candlestick practitioner would probably say you should pay attention to this bad boy. This is a nice reversal formation setting up here on the Russell 2000. On the day, it was down 0.27%, closing at 1,677 on the day. And that is your only two that are negative. Other than that, we start to go positive with the S&P 500, which also made an intraday high, an all-time high, all-time closing high. It's just a bunch of alls out there for the S&P 500. Today, it finished at 3,345. That was a gain of 0.33%, so 1/3 of 1% on the dot. And right now, you are in what's called blue sky territory. Not much to stop it at this point. It is a bit suspect to me how aggressively we rallied over the last 3 trading sessions. So it almost feels like a forced move. So for those that don't understand what a forced move is, it's a forced move. It would almost be like what you saw with Tesla, which is where you would get, I hate to use the word, collusion amongst certain individuals in the marketplace, we'll say big institutions, to say, okay, we as 8 or 9 or 10 big institutions and banks are going to buy and push this market up so we get all the retail investors in on a fear of missing out, just like Tesla happened over the last few days. And then once that happens, we rip it back down. So it was interesting to me because this period right here where TJ is moving his cursor between January 24th and February 3rd, we had this period where almost every day the market would try to rally and then just gave it up, could not do it. And that was definitely a change of pace over what we've seen over the past few months. This last 3 days has definitely been a bit of an outlier, so we'll have to see what the deal is there. Yeah, Big Ed says the Russell's a short play tomorrow. Absolutely, I 100% agree. I'll be watching that one as well. I may even get up early for that bad boy. I know, I don't like getting up early. All right, that was number 5 with the S&P 500. We're going to check to gold, which had a little bit of an up day, about 0.49. We'll call it 0.5%. That's coming on the heels of a small little green candle yesterday. Well, we've got a little bit of follow through here, which no big deal. Kind of expected as it came down into those lows that we saw back from early January. Gold on the day finishing at 1,570. It's down a little bit in the after-hour session, but that's still 0.5%, or a gain of $7.60 per ounce of gold. Podium time it is. Here we have, what do we go for the podium? We're going to go bronze medal goes to crude oil. Continuing on, here is your crude oil, which just cratered. We had that nice candle yesterday. I really thought you'd see more oomph and follow through today. We had a positive day, but it wasn't a huge day. You notice the long topping and bottoming tails here on crude oil. That was finishing the day rather strong, 0.63%. 51.07 is where it closed out, and it's about 2 cents lower in the after-hour session, so no big deal there. All right, that was your bronze medal, third place finisher. NASDAQ continuing its nice run. Here is the NQ. NASDAQ Composite on the day was up 0.67%. You had it closing at 9,572, and it is definitely the leader of the pack right now. Technology surging. Tesla obviously was the big major impact on your Monday and Tuesday session. Wednesday actually pulled it down a little bit, but you had other factors which actually brought that one up even more. So not all bad out there for the NASDAQ, actually looking pretty darn good, and we are pretty much at all-time highs yet again for the NASDAQ. But that wasn't your best performer. Best performer, and all of a sudden we got a lot of questions about this bad boy today. I didn't even think I have it up here. TJ's just not prepared today. We're going to the chart master slacking. Let's go to Coinbase, TJ, and bring that one up for us. And bring me up the price of Bitcoin. Today's gain doesn't make it the best performer out there, at least for our overall markets. It was until just a few minutes ago. 9,698. Gain of 0.41%. Just a few minutes ago is up about 1.26%. So it's falling a little bit right now in the after hours. Gain of $40 in the last 24 hours for Bitcoin. But the real story here has been central bankers and economists' comments and talks about cryptocurrencies in the marketplace and a digital currency, which I'm going to save for a little bit later on because I think that's an interesting topic. So that's your top 7 markets out there. Bitcoin leading the way. Since we did this yesterday, I'll bring this one up. The real the good one for me anyway, because it's my second largest holding in crypto, was Ethereum. That was up about 3% today. Ethereum is really experiencing some nice moves lately, and that's pretty much it for that crypto space. All right. Brendan says Bitcoin will break $10,000. Of course, it will break $10,000. The question is, when does it get back to 20? When you go through the supply and demand factors of this, I do see it hitting 20,000 again. It's just a matter of when. Is it a year down the road, 2 years down the road? Just supply and demand. It's what we talk about in financial markets, what makes prices move. When you have a limited amount of supply and more demand, that's what happens. Things start to move up. All right. What else do I want to get into today? There really wasn't much on the macroeconomic announcement perspective. Of course, there's a rate statement coming out for Australia here in just a little bit, but right now, nothing to speak of with regards to that one. Let's see, where's my clock? Perfect. All right, I'll go to this question from Sam. Sam, you sent this one in yesterday, and it says, on your February 5th show, or February 5th show, you answered a question about supply and demand levels during after-hours trading. Your answer referenced using those levels during regular market hours. My question is, what is your opinion of trading during off-market hours using the levels from for short-term trades? I'm not a fan. Okay, so I'm not a fan of active trading in the aftermarket session, right? I just don't trust the liquidity and the volume that goes into aftermarket. So right now it's 3 p.m. out here in California, 3:09 to be precise. The equity markets are closed, so the futures markets are going to have very low volume as well. I'm not a fan of trading in that time frame unless there's a circumstance that says, hey, you know what? You should be trading. For example, the last time I had a real active big positions in the financial markets in the after-hour session was the night of the presidential election in 2016. I had some significant I had options and I had S&P short going into that election. And of course, as we came into lock limit down in that after-hour session, what do you think I did? I closed it out because it couldn't go down any further. So what the risk to me was only to the upside. So that's pretty much the only time I'll trade them. Now to go back to your question, maybe I can flip it, and maybe I don't understand the question properly. But during regular market hours, I for one do like using those levels that were set in pre-market. You just have to follow the same rules. Remember, what we do as traders or investors is all about money management. So if I'm using a demand zone that happened at 3 o'clock in the morning, which do we really think that that's institutional? Maybe not, right? That could be just somebody, some retail investor who bought 5 or 10 contracts and the volume was so low it actually caused price to turn back up. So I don't know the validity of those levels, but it did turn. So there may be something bigger there. Maybe it was a 50 million contract order sitting right there, but only a few of them filled and it rallied back up. I just don't know that. So during regular market hours, if I'm going to use that level that was formed in the pre-market, I will make sure that my stop loss is set accordingly, because if that level was a huge institutional block, what's going to happen? It's going to turn during regular market hours and rally back up. If it was just, me placing an order in the after hour session and it was, 5 contracts or 10 contracts, and it comes down during regular market hours, it's probably going to knife right through it. So what? I have my stop loss in place. As they would say in Italy, ma chi se ne frega? Who's going to care? It's the same thing during regular market hours, so just make sure that if you are using any pre-market or post-market sessions or outside of regular market hours, that you have a stop loss in place. That's the biggest takeaway from all of it, is just make sure your risk management's in place, because the road to failure, you'll get there quicker by not using stop losses. And that's funny because there are a ton of TV pundits out there that will say, you should never use stop losses. You should never use stop losses. Well, there's also a quote out there by John Maynard Keynes that says, the markets can remain irrational longer than you can remain solvent. And if you think that that's a bad statement, just look at the chart of Tesla. Those short sellers are absolutely, they're people who probably lost every single penny they have based off Tesla's move over the past 2 months. All right, Sam, thank you for that question. If you guys have some, I'm alone in studio today. I do have a sore throat, so I will try to mute my microphone if I have to cough out there. I apologize for that. If you do have questions, feel free to send them on in at powertradingradio.com by clicking that little button that says Power Blast, or you can join our discussions. We've got Brendan and Big Eb out there on our Online Trading Academy or Power Trading Radio YouTube page. We've also got Kevin. Good to see you back, my friend. Jorge, and thank you for the message last night. Gretchen, Harrison as well. Heath, and that's it for the Power Trading Radio YouTube channel. The shout out, I got to get the, I guess my Online Trading Academy one isn't up yet. TJ usually has it all set up for me over here, but it's just throw TJ under the bus day. That's what happens when I don't have a guest. I'm just chart master just failing on me over there. And it's just Gayer. Gayer, you're all alone over there. It's awfully quiet. I hear crickets on your chat. So Gayer, sending me questions in over there if you want some answer today. I've got plenty of time today. All right, guys, that'll do it. I'll be right back after a short break to go into more listener questions. Stay tuned.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way. Click here to get started with Online Trading Academy.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube, or download the podcast from iTunes or wherever fine podcasts are downloaded.
Hello, everybody. Welcome back to Power Trading Radio. It is your Thursday afternoon edition. I'm alone in studio, which gives me free reign to do whatever the heck I want to do. So I thought we were going to bring in a couple of dancing ponies today. You want to bring the ponies on in? I'm just kidding. We won't do that today. Again, if you have listener questions, I will address your listener questions, so bring them on in. Lee sent in one this afternoon, and there were some comments made by some prominent economists. You've heard a lot of chatter over the past few months. Of course, we've talked about this over a year ago on the possibility of a crypto or digital currency for the Fed and central banks, and what that might mean for us. And Lee sent this one today. He said, all this talk about central banks having a digital currency, can you explain a little bit how it will work? Will it be like Bitcoin? So I'm going to digress for just a second, and I'm actually going to take some content from the classes that you can get for free at otacademy.com on cryptocurrencies. I built a whole course, and I would encourage you to check it out. It's a great class. I think there's 17 different videos that really encompass on a high level what it all means, why it's important, what the changes are, why it's getting so much fanfare, and really how it works and how you can use it. So Let's start with the fiat currency side of things. TJ's got the pages up here, so we'll run through it. Obviously, we're all using fiat currencies, right? We're using euros. I know we've got some people using Norwegian kronas. We've got people using British pounds and yen. We all have a fiat currency that we are using. And that fiat currency has objectives, right? The first objective of it is it's backed by the faith of the issuing government. Right now, I think in America, we would probably have the least amount of faith in our government at this point. I think it's the biggest separate divide we've had in a long time. But bottom line is that currency is backed by the faith of the issuing government. I know Brendan right now is probably lighting up our YouTube page going, it's going to die. Fiat currencies all fail. And he would be right. Number two, the government has declared this legal tender. This is the challenge. Because what happens is the government can have a monopoly on whatever that legal tender is. They can make it whatever they want. If all of a sudden the government said, hey, we're going to make number 2 yellow pencils legal tender, and that's the only thing you can accept, businesses will be forced to use that. Of course, that's an extreme example, but government has that monopoly, which anytime we have a monopoly, usually there's an abuse of power. Third one here is the value moves of supply and demand. And of course, we see that. We reference the dollar index a lot. For any of you who are Forex traders, the dollar is one of the more important currencies to study because of its relationship with all the currencies around the world. This does bring into macroeconomic issues and understanding how these countries and policies and governments impact the US dollar. So that's fiat currency. No big deal there. I think you guys all get it. What's interesting here is the purchasing power of the dollar. And the reason I'm showing you this is because it directly answers Lee's question. What we have here is a graphic that shows when the Federal Reserve was created in 1913, how your US dollar, if you are an American and you were holding the dollar from 1913, right now your US dollar is going to get you about 7 cents. That $1 you had back, it lost that much in purchasing power. Part of that has to do with inflation, of course, is a major piece of it. But the other part is I drew here, it's showing up in a blue or purple line, I don't know what color that is. This is the money supply, the amount of physical dollars in circulation. And you can see that as the amount of money in the supply, or amount of supply out there, it significantly crushed the value of the US dollar. This is important because this sets up the discussion of digital currencies and the question of Lee, which is how is this going to work if the Fed does adopt the digital currency? So we'll go one more. Now we look at digital currencies. And I'll ask a question of the group out there just so we can all kind of participate and I can see that you guys are interacting with me. I would like to know, by a show of hands, you can either say yes or no. How many of you are using digital currencies right now? Like you've used them in the past couple days, right? Since the beginning of the year, either yes, you've used them or no, you have not. Type it into chat. I see a bunch of people there that are going to be inactive and not say a lot because you guys just kind of lurk in the shadows sometimes. But grab your keyboard, type in either yes, I use digital currency, or no, I do not. I want you all to answer this one. So I'm going to wait here and kind of stall a little bit just so you guys can type it in because I see you all chatting. Participate. I'm giving you some good questions out here. So digital currency. I guess the bigger question is, what is digital currency? And yes, I'm still stalling so that you guys could type in yes or no, that you use it or don't. The big question is, what is digital currency? And Ruben is on top of it. The answer is this. You are all using, every single one of you is using digital currency. 100% of you. 100. Do you have a Visa? Do you have a MasterCard? Do you have an American Express? Do you have a Diners Club? Do you have any sort of card that you swipe at a point of sale? That is a digital currency. So right away, you got to change your mindset. Because we hear this term digital currency, and it's like, oh, this is taboo. It's oh, God, Warren Buffett, don't date it. It's evil. It's evil. It's not. It's simply saying, I have a digital ledger somewhere that allows me to access money. That's all it is. So it was a trick question for the day. Every single one of you, Edward, yes, you have. Heath, you have. Larry has. All of you guys have used digital currencies this year. Unless you're telling me that you are purely a cash person, which makes it very hard to trade, which I guess you could say would be digital currency, would it not? Because your money is not literally sitting there. They're making digital entries on a ledger. Your money really isn't moving. So we're all using it, period. What happens, the problem is we start to associate that with a cryptocurrency. These are different things. And let me explain why. Because Lee's question says, will it be like Bitcoin? I assure you the Federal Reserves will not be anything like Bitcoin, and I want to make clear why that is. So let's go to our graphics here again. TJ, thank you for bringing these on today. Digital currency. I want you to look at it from two different perspectives. Number one, you have what's called it is a trick question, Harrison. It is trick. But see, I got you all with it. Number one is, I want you to understand what a centralized market is. Okay, a centralized market is what we are all living with today. It's what we have been born and raised into. What that means is somebody controls that ledger. So let's in this illustration say that we are all of you here are these little people on the outside, and we're all connected to the same bank. The crazy thing about all this is that bank, whatever that institution is, they're the ones that control the ledger, right? They have the information of who has what money. And what makes this scary is it's singular control. I have one person or one entity that's controlling that ledger. That's the part that's scary about centralization, because what ends up happening is there's vulnerability there, right? People are focusing on that centralized entity. If I'm a thief and I want to rob someone of data, of money, of assets that are digital, I'm going to go to whoever's controlling those assets. In this case, that institution, we'll call it a central bank, we'll call it your bank, we'll call it Visa, MasterCard, anything. There's trust issues that they are not only managing the security of that hub, making sure it's rock solid and that your identity and your assets are protected as well as mine, but also the trust that the people that are managing that data aren't going to take that and sell it out to somebody else. So this is the problem with a centralized way of doing things, and this is what our society is presently. When we look at what the crypto space does, and in essence, it's trying to take this away from a central entity and decentralize it. And it's hard to understand this without me going too deep here. But basically, when we decentralize it, we all have each other's information. Granted, it's in a ledger, it's got crazy numbers and letters, so you wouldn't know that it's actually Merlin Rothschild has X amount of dollars. It would be like 1A6 capital D 2P1 659 A76298. That's your code, right? No one's going to know that that's me. So that's the big distinction here. The big difference is the centralized and decentralized aspect of it. Now, there's also another piece here, which I think I may have actually, did I not put it in here? Okay. This is what we'll answer Lee's question. So the original question was, is this going to be like Bitcoin? Here's what you have to understand. Bitcoin is completely decentralized. Some would argue that the mining networks, which is more complex than we need to get into right now, but those nodes, those people around the edge that are decentralizing it, some would argue that they have a little bit too much power and there is a bit of vulnerability there. The point is there is no one central entity who is controlling that data, the ledger, the literal book of who has what Bitcoins, right? If the Federal Reserve were to do something like that, they would lose power, because if it was decentralized, that means that you and I were the ones keeping track of the Federal Reserve's ledger. Their ability to manipulate that ledger would all of a sudden disappear. So let's understand that there is centralized, which is what the Fed is going to do. The Fed will absolutely remain a centralized entity that's controlling the money supply with their digital currency. It will never be like Bitcoin. And here's the fundamental difference. TJ, bring these ones up. First one is, we'll look at Bitcoin. Bitcoin is what's called a public blockchain. That means that all of us have access to it, right? We can make changes if we need to, but if it's not a consensus amongst the whole network, our changes will get rejected immediately. It's a consensus algorithm, meaning that the entire community agrees upon a way to process, store, and transfer these data and assets. It's open source. So if you wanted to make changes, you potentially could make changes. And this is why we see so many forks of Bitcoin, right? You have Bitcoin, which started it all. Then you saw the spinoff there to Litecoin, and then Bitcoin Cash, and Bitcoin Gold, and Bitcoin Diamond. These are all people taking that open source code, modifying it slightly, and creating a new digital currency. Can you imagine if they were to do that with the US dollar? No chance in hell that's going to happen, guys. Sorry. Next one is that anybody can participate. All of us have the freedom and liberty to join into that blockchain of Bitcoin if you choose to. That's public blockchain. That is what makes me excited about it, because it is the community and the open sourceness of it that makes it stable and secure. The Fed will not be a public blockchain. It may be a federated or consortium blockchain. What this means is it's run by a select group. And here's what I envision. I envision the Fed creating a consortium or federated blockchain. And in that, what will happen is the Fed will now be in consortium with the major banks around the world. So they will have access to everybody's assets. They will know when things move and where they move. But it will be the Fed as well as those banks around the world. That means there's a select group, but only people that can access that or modify it or change it or anything are part of that group. You and I will never be a part of that. The final one, which is probably the real solution for the Fed, is to go to a private blockchain, which means they can write permissions. It's all controlled by one organization. Nobody else can make changes to that of any kind except the Federal Reserve or the central bank that's actually issuing that digital currency. And here's why it's a problem. When we look at the issues facing this, in a public blockchain like Bitcoin, right now we know that there will be a maximum of 21 million Bitcoins. That's the most that will ever be released. Could it change? Yes, technically it could. But the entire network would have to agree to increase that. And part of the reason they don't want to do that is to drop the value of their existing Bitcoins, because part of the supply and demand equation is saying there's only 21 million. The more people that jump on, it's going to go even higher. With the Federal Reserve or a central bank issuing a digital currency, let's call it the Fed coin, or you can Fed coin or Fed token if they want to piggyback off another network, but they wouldn't do that. What would happen is there would be no fixed limit of coins or tokens, whatever you want to issue. They would modify that to their needs. So that chart we saw earlier where the Federal Reserve was created in 1913, and we saw that absolutely just a horrific decline in the value of the US dollar, that would not change. That would still be there, and it would be even easier for the Fed to modify or create more or less US Fed tokens, coins, whatever you want to call it. I'm going to call it the Fed coin, just so I can stop saying coins and tokens. So Fed coin. So for Lee's question, that's how it would work. They would create the Fed coin. There would be an unlimited amount. We wouldn't even know how many they were because the Fed would do whatever they could to manipulate that. I know we're using the word manipulation, but to keep the US dollar as a stable measurement of value. This is the problem with Bitcoin. Because we only have 21 million, if there's a surge of buyers in Bitcoin, what's going to happen to price? It's through the roof. And any economist will say, well, that's one of the fundamental principles of the US dollar is it needs to be a stable store of value. Bitcoin will probably never be that. But the Fed coin will, because as soon as there's a big surge in it, they can all of a sudden issue way more supply and it pushes it right back down. Or if our current presidential administration needs that dollar weaker, what we could do is we could continue to issue more and more Fed coins to push the value of that coin down, depreciating your purchasing power and my purchasing power of our currency. On the flip side, we could also remove supply from Fed coin. And that would do what? That would raise the value of the dollar. So it's a strategic move. Now, I guess it begs the question, do we really need it? Let's look at it from a practicality perspective. One of the biggest things that annoys the heck out of me is my wallet. I know you guys can't see it here, but yeah, I'm the nerd. I actually have searched high and low for a special wallet that allows me to not only carry my cash that's in the wallet, right? We have bills, we got money. Great. But I got to wait for change. I have to touch dirty, sticky money. I tell you what, I was online the other day, and some lady had a $5 bill shoved in her mouth waiting as she was opening her purse. I'm like, you know how dirty this is? I have that. And then I can open up the little change portion here, and I've got to have all this stuff. Change. It's so annoying. Think of it if we went to a digital currency. No longer would we have to have any paper or fiat, actual, tangible, holdable money. I could basically just have this. I have our IDs for sure will be on our phones here at some point. I can already put my credit cards on my phone and just tap it at the counter or 7-Eleven or wherever I want to go. I think you'll do the exact same thing, but the money will now be controlled by the Fed. So it's interesting because it changes the dynamic. Do we now need banks, or will the Fed become the bank? That's the big question. That's why I said confederated or consortium blockchain versus private. But now instead of ever having to hold this stuff or touch it and have to use all the hand sanitizers, I just tap my phone and I can pay. Any vendor, I could sit here and pay Brendan. Let's say I really want to just tap his phone, or I could send him right now via text money. Instant transfer, instant. I love that prospect. To me, that's exciting. Of course, with everything, it's a double-edged sword. You've got good side and you have a bad side. The ease of use, the transparency, the functionality, to me, I love that side. The other side is a little bit, we could say, nefarious in that the government, central banks and the Federal Reserve, would have access to every single penny that you ever move, ever, and except for barter, right? So maybe it would bring a rise in our economy to barter and medium type exchanges. But if you're exchanging anything in their digital currency, they know exactly what you did, what you bought, who you sent it to, how much, what time. So all of a sudden that data privacy that we're so concerned with things like Apple and Google, well, they already have a ton of information on what we do and our spending. But this would give the Fed, central bankers, and banks in general, an unbelievable amount of data about us. I personally have nothing to hide. However, I know a lot of people who are using their money in ways they probably shouldn't, and they probably don't want people to know where that money is going. I don't know how the Super Bowl bets would have paid out, because now if I paid people out for winning the squares at my Super Bowl party, they probably have to pay taxes on it because they saw that it went to that. So I don't know. There's a double-edged sword. I like the prospect of it. I'm a big fan of having physical money out there, but I know it was a long-winded explanation of will it be like Bitcoin and how it works. But that is my assessment of how it will work. I'm sure that there's going to be a lot of other people that have comments. Let me do this. Let me take a break so I can let my voice rest for a second, and I'm going to read through a bunch of comments because you guys have been lighting up chat. I appreciate that as well, and hopefully I can get some feedback and integrate those questions into today's show. So if you have anything last minute you want to send in at powertradingradio.com. Click that Power Blast button, or join our discussions on YouTube. As you can see, it's fairly active out there on Power Trading Radio as well as Online Trading Academy. So we'll be right back after a short break.
We've never seen a platform created with the driving principle of helping people consistently make better trading decisions. We know consistently successful investing and trading is about much more than simply taking advantage of the right opportunities. It's also about passing on the wrong ones. Click helps you score potential trade opportunities and calculate stop levels, customizing risk management to be in line with your personal trading plan. Click is also a smart platform. Because it links to OTA's student portal, Click can serve a custom experience to every user, based on what they trade, based on how they trade, their experience level, which OTA classes have been completed, and much more. Simple enough for new investors and powerful enough for the advanced trader, all while integrating OTA's award-winning education, tools, and services.
When we walk into a class and talk to students that have been trained by other platforms and now trading on Click, they're just ecstatic. They can't wait to have it all connected to live execution, which will be coming soon towards the end of the year. And everybody here is very, very excited.
I love it. Not only do I love it, everyone I talk to that's used it loves it. It's so simple and easy. Breaking down the process of core strategy to placing a trade is just phenomenal. And it really shortens the learning curve.
It's one platform to get familiar with that you can then apply to futures, forex, options, proactive investor. It's almost like somehow my thoughts have been distilled down into a sequence of steps. This platform, I feel that I could become an expert in a much, much shorter time, but with a great amount of confidence around actually getting to be able to get the screen to look like I want it to. The fact that Click is an online platform is unbelievable. I'm placing a trade that I'm comfortable with and I'm ready to go, bring it on.
Welcome back to Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com.
Hello, everybody. Welcome back to Power Trading Radio. Merlin Rothman with you for your Thursday afternoon edition. Going off on a little bit of a tangent that I normally don't go down the road of cryptocurrencies, but it has become a very popular topic, and I think that you will see much more about this going forward. Today's discussion that I had on the previous segment wasn't, saying that cryptos are the greatest thing in the world. There are some great uses for them. There are some great use cases for digital currencies, for blockchain, for programmable blockchains, all these things, decentralized networks. However, out of this list of thousands of tokens and coins that are out there, in my opinion, you'll probably get like a 5% survival rate. Most of them will disappear eventually due to just lack of interest or failed projects or whatever. There will be a few that stand out, and I think that those will become part of our nomenclature, just like Google did many, many years ago. I mean, and some of the things we use today, if you go back 20 years, you'd laugh at. You think, this is stupid. I'm not going to use this. Well, nowadays we think of them as indispensable, and we can never do without them. I don't know if we'll get that stage with cryptocurrencies, but it could fundamentally change the backbone of the way that we transact, the way that we communicate, we store information or assets and things of value. So that's why I wanted to get to Lee's question. Lee, thank you so much for that one. I've been wanting to address it, but I like that you sent it in. So let me go to a couple questions here. One just came in from Esmael. I hope I pronounced it right. I apologize if I didn't. MasterCard and Visa are backed up by big financial institutions. What's crypto backed by? That's a good question. It's not backed by a financial institution. So, I guess it depends. Some of them, especially when they're stable coins, are backed by assets that are sitting in banks. Some of them are backed by gold. Some are backed by the principle that there's safety in keeping your assets there and those assets appreciate, which is that's kind of the case of Bitcoin. That's why you kind of call it digital gold. It's the security of the network and the decentralized portion. There are reasons why some of them have much greater value than others or much more desirable to hold. That is one of the big challenges why a lot of people feel that cryptos is a Ponzi scheme. It's like basically saying if I can get more people to buy this cryptocurrency, it's going to go up in value, therefore I make more money. A lot of these cryptocurrencies are actually doing projects and building things out. Like, for example, one of the ones that's a major holding in mine is called EOS. And the main reason I have so much EOS is because they're doing 30, 40, 50 million transactions a day on their network. You guys know how many, let's see if I can show you this one real quick, just to give you an idea. You have to think about like buying a stock. Like, why would you buy a specific stock? You're buying it because you believe in the company. 1 second as I try to type this out. There we go. I'll just give you an example. So a lot of people are really gung-ho on Bitcoin, which is my, I can't remember, it depends on the price, but Bitcoin, Ethereum, and EOS are like my top 3 holdings, and they jockey for position. But I'm just showing you this one right here. I believe that, number one, I'm using cryptos as a store of value. That's right, I'm putting money there. I do believe in the supply and demand aspect of it, and I think it's going to rise up. The other part here is going to be, what is going to be the next one that's transactional? Esmail was asking about Visa, MasterCard. If you're a merchant, you have to pay 3%. 3%? 2 or 3%, something like that? If I use something like EOS, I don't pay any fees. So if I'm selling anything, what would I rather use? Would I rather have my customer come to me with a Visa or MasterCard, which eats 3% of my gains? Or would I rather use EOS, which is going to have transaction settlement time that's just as fast, but I don't have to pay anything there? I get 3% greater revenues, 3% greater rate of return. We talk at Strategic Investor, if you can gain just 1% in your account more than the average, you're going to do so much better over the course of time. So I was looking for one that has more transactions. Now check this out. TJ, bring this bad boy up here. This is called blocktivity.info. I'm going to show you Bitcoin. Bitcoin right now, look at this network. It is completely, over here on the right-hand side, completely bogged down. This little red line says this thing is hurting. It's just choked network. They're only doing 486,000 transactions a day, and that network is packed. Visa is doing like 4,000 a second. So there's no way that Bitcoin could ever get to the transactional volume of Bitcoin. What about Ethereum? They're only doing 600,000 transactions, and their network is in the orange. Well, look at what EOS is doing. It's about as bogged down as Ethereum, but it's doing 56 million transactions today. It did 74 million transactions, I don't know when, but that's the record it's done. So for me, if something's going to get to that digital payment processing type of cryptocurrency, EOS has a significant lead. Telos is also becoming very popular because the amount of transactions. So these are some things you have to look for, and if you're getting that crypto space, there's a lot of different things to consider. The last one was Math Tutorial Lab. It says, can you define blockchain again for me? I don't know if I can define it, but in essence what it is, it's a chain of blocks of data where in one period of time, let's say each block represents 60 seconds of time. So each block will aggregate all of the transactions that happen in that 60-minute window. It's all written in there, and then it's encoded, right, through a special algorithm, and that will go into a chain, and the next block starts, right? The further we get, that block gets deeper in the chain, the harder it is to change, because you have to change every other transaction. If you do that, it ruins the chain. So the networks protect this blockchain from being tampered with, from being violated. And that's why I like the public blockchains better, because the network will verify transactions and not let people tamper with historical data. But a blockchain is simply a string of blocks of data representing usually a specific amount of time strung together. So we can go back and just through time and see what moved where, how far it moved, where did it go. There you go. That's the basic one. We can get much deeper into that. If you'd like to know more, again, you can go to otacademy.com. Just log in there, and you'll see under cryptocurrencies, a whole class will help explain that much, much better. All right. Is XRP ever going to be a thing? I don't know. I don't think so. I actually have some XRP. Should have got out when it was at $3, but my average price is 7 cents. I'm okay there. I don't know. I'm actually not very optimistic on it. There was talk about the Ripple Corporation doing an IPO and going public, which would be very interesting. I mean, you have $60 billion sitting in, was it $60 billion? There's a ton of money sitting in their Ripple currency. I don't think it's going to be used by central banks. I think the central banks will create their own. Therefore, that would be a big shock to them. They were trying to replace the SWIFT payment system. Anyway, am I late? And TJ's waving at me saying I'm late. All right. That will do it. Let me see if I got one more question on this side. Arvin says, what happens if you lose your crypto password? You're done. This is the scariest thing about crypto. I've actually, in a long-winded way, I won't explain it all, but I have lost passwords. That basically means that there's a digital vault. There's a location out there in the digital universe that holds my Litecoin. I lost 3 different accounts of Litecoin. They were small. They're only, what was the amount? It was, I think, $100 each. $100 worth of Litecoin at the time. I was creating them for somebody else, and I made a simple mistake on the way I was opening these accounts, and I didn't have the right password. So those are they will be there for the end of time. No one will ever access those accounts just because of statistical probability, and there's $300 worth of Litecoin, not today, but there was $300 worth of Litecoin. They will just sit there unaccessible because that password is gone. If you lose it, it is over. You will not get those coins back. Can't call up a help desk and say, hey, can you help me out here? It's gone. It's done. All right. Gayer, you sent it in right at the end. You know what? TJ's gonna hate me because I went long today. Let me just change one thing. We were gonna talk about. I was gonna go to your economic calendar, but I'm gonna do this one just for Gayer because he asked me to. Of course, it's live and it's gonna take me forever, and I'm making all kinds of mistakes. Why are we not getting my? There it is. Let's go to. That'll do. Perfect. So type up a currency out there, TJ. I want to go to what Gayer was asking about, which is going to be the British pound Japanese yen, GBP JPY. All right, let's check that one out. And as we do that, I'll try to. Boy, there's your Ripple. We're looking pretty darn good. I love the fact that I'm averaging 7 cents. It's hit 20, almost 29 right now. Talk about a rally. All right, bring up GBP JPY, and that will wrap up our show. And I'll go to your economic calendar. Arvin says, is there no recourse for lost passwords? How does that affect the value of crypto? It's called destruction is what it is. And if you look at the 21 million Bitcoins that are out there, that will be out there ultimately, I've read estimates that right now they say up to 4 million are lost because they just haven't moved. And so the assumption is if they haven't moved in years, someone lost the password. So what does that do to supply? We think, oh, there's going to be 21 million, but every day there's probably less and less Bitcoin because people are losing their passwords or their phone gets destroyed or something. They didn't write down the backup codes. Always write down your backup codes, guys. All right, so you wanted this on a 15-minute time frame before I make the show go way too long and upset everybody out there. He wants to know about British pound, Japanese yen. TJ, give me those numbers. 15 minutes, all right. 142.40. So TJ's going to map this stuff out for us. 142.40. I can already tell you I like it. Next line we're going to put at 142.60. It's going a little bit wide of a range. Okay. Stop loss is at 142. All right. Let's that last number there and say 142. Okay. So basically we've gone through. Oh, no, you're going down further. I'm not a big fan of it. I can tell you right now that these numbers seem whack. If you're doing 142 right there, yeah. So what do you think? British pound Japanese yen short at 142.40. That's this line right in the middle. Your stop loss is at 142.40. Okay. 142.608, and then take profit. Your risk reward isn't that great, right? You're not taking on a commensurate amount of reward for the amount of risk that you're taking. You're looking right now at about 21 pips worth of risk for 40 pips worth of profit. That's just barely 2 to 1. I would not take the trade. I wouldn't do it. I like the levels, and I'm glad that you did this analysis because I like the zone. I think your stop loss is probably too big for this specific situation. I like your target. I like where you're getting in. I think your stop loss is too big. You should be shooting for at least 3 to 1, preferably 5 to 1. There you go. Done. Did my analysis. See? That's what we get for doing live shows. All right. Not going to take a break. We're going to go right through to the end because I've already gone way too long for this show. Here's what we've got cooking for tomorrow, Friday, February 7th. U.S. dollar has average hourly earnings and non-farm employment change and unemployment rate. British pound has Halifax, HPI, and Canada with employment change and their unemployment rate. Now, if we've looked towards your earnings calendar, it's kind of quiet. You've got Honda, Novo Nordisk, AbbVie, Hoya Corporation, and Denso. And then, of course, John O'Donnell will be the ambassador of opportunity on our show tomorrow. Who knows what we're going to talk about, but we'll take it down student lane over there like we did today. If you have things you want us to address, send them on in like Lee did. Lee pretty much steered the whole show down this crypto path. Hope you guys enjoyed that. If you'd like to learn more specifically about cryptos, you can go to otacademy.com. There's a whole crypto class there for free you can check out. If you'd like to know more about supply and demand, if you'd like to know more about options, futures, Forex, all these different asset classes, go to our link that's showing up right now on social media. You simply click on that one, type in your zip code to tell you which of our 48 physical brick and mortar schools are nearest you. Again, there are free classes, paid classes, community events, and much, much more, all with an understanding of helping you realize how these financial markets are not run by the institutions, but how those institutions influence it and how we can take that and put it to our advantage. Again, if you'd like to know more, click those links showing up on social media, type in your zip code, find out which one's closest. Until then, happy trading, everybody. I'll see you tomorrow. As my voice disappears.
You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.